All right, all right. Good afternoon. Good afternoon. We are live. We get IG on live. How are you guys doing out there today? On this beautiful, here we are live on IG. How you guys doing on this beautiful Tuesday afternoon? It actually is beautiful here in LA. Hopefully everywhere else that you guys are is just as beautiful as it is here. Hope you guys are doing well. Elaine Proby here, CEO PROBY'S Tax and Accounting. And of course, today we are going to, I'm going to make it pretty brief, just some quick updates and things that you guys need to do for year-end tax planning for your business. Here we are getting ready to get into the month of December. So this year is just out of here. And so we're getting into the month of December here shortly. So we want to make sure that there are some things that we need to do them before the year is out for our businesses so we can at least save on taxes. This is the whole thing. You don't want to work the whole year, make some money, and wind up, again, like I always say, give it all away to taxes. So you want to be able to do some things prior to the year end. If you can make that happen and save yourself some money on taxes, because guess what happens after the end of the year when it's time for you to go and file your taxes? It's too late to do anything that you may be able to do prior to year end. So one of the things I want to emphasize before we get to the end of the year, take the month of December, you guys, and pay attention to what your business has done, what you're doing. And we want to talk about some points that you can pay attention to make sure that you are prepared for year end and do whatever it is that you can to save on taxes. This is why we have these conversations. We have these conversations to save on taxes. Okay, so I want to talk about 4 different things that we can do for year end for you guys to save on taxes. And make some notes on this stuff, hit like and share on this video, make some points on this stuff. If you are operating a business, and again, when I talk business, I always like to emphasize it's not just the people who have these major corporations and all this other stuff that we're talking to. We're speaking to anyone who is operating a business, a self-employed business, guys. This is what we're talking about today, okay? So don't think because you're not running some major operation. Hey, Pam, thanks for jumping on here. All right. Hey, Shivas, thank you for jumping in there. So we're talking about how you save the year-end on your year-end taxes. And I was just emphasizing that we're not always speaking of major corporation when we talk about business. Any business that you're operating as a self-employed individual business, your small business, it doesn't have to be an incorporated entity. All this stuff applies. So what we're talking about is your business, period. And we're all running some type of business, right? Even that side gig is a business. So I want to talk about 4 points today, guys, to save on your year-end taxes. I'm trying to avoid people coming in and all of a sudden we are hit with all these taxes at the end and nothing we can do about it. Hey, Makiba, thanks. Good afternoon. How are you? Thanks for jumping in here. All right. You guys hit like and share, get some more folks up in here to listen to this. It's going to be fairly brief, but it's going to be to the point and make some notes on it. We are talking about 4 points to save on your year-end tax planning. And let's start off today, guys, with the first point. This may sound simple, but it's the most serious. Hi, Laverne. Hi, sis. Thanks for jumping in. Hey, BJ Morris. Thank you for joining us today. All right. So the first point, guys, it may sound really, really simple, and it's just a few simple words. It's called know your numbers. And I'm saying that it sounds really simple, but it is the most critical. And know your numbers, meaning if you are operating your business, guys, you need to know what your business looks like. How much money did you make this year, right? You have 11 months, you can figure this out. How much money have you spent? So what are you looking like? What is your bottom line looks like? Because a lot of this tax planning stuff that we're talking about is not going to be as important if in fact you're operating your business at a loss. So if you're already losing money, some of the things that we're going to talk about might not be central, but you need to know them anyway. But the first thing, point number 1, know your numbers. So you want to know what you're looking like right now, because a lot of times, and I get this all the time, most people are very surprised at the end of the year. Like, I didn't know I made all that money. What happened to it? Where did it go? And I get that. Oh my God. Everybody comes to my desk every single time, and no one realizes how much money they made. They don't know what happened to it. They want to know where all the money went, right? And we're all guilty of this conversation. She says, what's that? You taught me knowing my, okay, you taught me about knowing my numbers. All right. Okay. Yes, it's very vital to the success of your business. It definitely is. And again, like I was saying, we're not always on top of this. Some of us are just operating and we're moving so fast and we're not tracking everything. We don't always know how much money we make. Some of us are still operating out of different bank account. We're taking revenue different ways. You know, some of us is getting the Cash App. We're doing, Zelle Pay. We're doing so many different things because we're moving so fast and we don't always know what we make. So now it's time for you to stop. Know your numbers. Do it now. Find out how much money you made. And then while you're at it, you need to find out how much money you have spent. Now, if you make more money than you spend, that means you have a profit, right? That means you have a profit. You're operating at a profit, which is excellent. That's what we want to do. We're running our business so we can operate at a profit, so we can have a good cash flow. But doing that now, of course, it can lead us into a tax situation, right? So we want to talk about some things that we could do to avoid paying, too much taxes or any more taxes than we have to. So that's the other points that we're going to talk about. So first and foremost, hi BJ Morris, thanks for joining us. First and foremost is knowing your numbers, knowing what the bottom line looks like. Are you operating at a loss or are you operating at a profit? And hopefully more people will come to the next year to do their taxes, and they will already know this information, and they're not going to be surprised. Like, I made $500,000, or I made $200,000, or you mean I made $100,000? Where is that money? And what happened to it? And while we're talking about having a profit, guys, I wanted to point this out for the people who are self-employed. A lot of times they don't realize is that if you were able to pay your personal bills, pay your rent, pay all of your personal operating expenses out of your business, it means that your business made a profit. Okay. So a lot of times people come to my desk and they're very misinformed. They're thinking, well, I made no money, I have nothing left. But your business income and your business expenses is totally different from the money you spend on yourself personally. And for you to be able to pay your personal rent, or for you to be able to do anything on the personal side, is because your business made some money, right? Because if your business made no money, you couldn't pay your rent. And so they don't realize that the money that the business made, the profit from the business, is what you live off. And that is what's taxable. It's not the fact that you spend that money on your personal rent and other personal expenses. That doesn't mean that you made no money. The profit from the business allow you to be able to do these things. That's what is taxable. Okay. That profit from the business, income minus expenses, that's what's profit. That's what you pay taxes on. That's your profit. All right. So I want to get that straight. A lot of people is confused about that because they use that profit to live off of. And so they come to my desk and they say, I made no money, but you did make some money because that's how you survive. That's the money we're talking about that we're trying to avoid paying too much taxes on, so that you guys can keep more of that money in your pocket. Okay, so the first thing, know your numbers. And we want you guys to take a look at that now, before the year's out. Okay, point number 2, guys. Now, because you know your numbers and now that your business is showing a profit, what we want to do is try to avoid having to pay more taxes than we need to. So from that profit, we want to sit back and say, okay, what can I do to pay less taxes? So there's a few things that you can do. One of the things, guys, I wanted to point out is you can pay off your accounts payables, right? Sometimes we all have a bill that is left over from maybe inventory that we purchased, something that we bought that we're going to pay later on. It might even be a credit card bill. We may have accumulated some credit card expenses, so we still have those things on the table. Nearing the end of the year, what we can do, now that we're having a profit because we know our numbers, we have some money that we made, what we can do, if you're operating on a cash basis, which most of us are operating on a cash basis, guys, most of us are on a cash basis where we pay taxes on the money that we receive, and we write off the monies that we spend. You have to physically spend that money to be able to write off that deduction. So because of the fact that we are looking for more expenses. If you have a credit card bill out there that you use for purchasing of, any type of merchandise for your business or any type of expenses for your business, you might want to pay that credit card off so you can write those expenses off. So keep in mind, if you use that credit card to purchase some items or to pay some expenses, you don't get to write off those expenses on your taxes because you didn't pay the credit card. You still owe that money, right? And on a cash basis, you have to physically pay the bill. So what you want to do as part of saving on your taxes, you still have to pay the card anyway. So you can, now that you made a profit, you can wind up paying off your credit card or pay off those balances. You can pay off any payables. If there's a bill that comes in for merchandise that you purchase, you can pay that money, pay that bill before the year ends. So you can write off those expenses, reduce your profit, and pay less taxes, right? Is that simple enough? You guys hit a like on the bottom here in the comments. Let me know if that was simple enough. Roy Turner, thanks for jumping in here. All right, so let me see if that was simple enough, guys. Give me some thumbs up at the bottom. So you want to take that profit that you made and you want to pay off these expenses. If it's a credit card bill that you have, you still have to pay it next year. So pay it now so you can pay less taxes. Pay any accounts payables, any bill that's left over, pay them before the year is out. Make sure those checks are dated December 31st. And or however you make those payments, make sure that they're gone before the end of the year, and you can write off those expenses, reduce your taxable income, pay less taxes. That bill will be paid anyway because you still have to pay. And that's one of the things that we want to emphasize in terms of reducing your taxable income. All right. So for those of you who just joined us, we're talking about 4 of the year-end business tax planning tips, ways that you can pay less taxes. So the whole plan is to make as much money as you can and pay as little tax as possible. Keep more money in your pocket, right? Have a better cash flow, invest, and build wealth. That's the whole point here, guys. These are the discussions that we're having. All right, so that's the second point today. Third point, we want to talk about purchasing major assets, right? If you have a positive cash flow, you made some money, now you are able to purchase some major assets. If you needed an equipment, let's say you needed equipment, but you were delaying buying this equipment because you want to make sure your cash flow was sufficient throughout the year, so you didn't want to spend that money. So now that you see that you did your numbers, we did the numbers, now we see that we have this profit, so we can go ahead and get this equipment that we want, right? Major assets, equipment. If you need to buy a vehicle, for instance, you know what I mean? Any type of major software, any type of asset that the business needs. And you were holding off on spending that money because you want to make sure there's cash flow for you to operate throughout the year. Now that you see where you are, you can purchase those equipment right now. And what that does, it allows you to take the depreciation of the asset that you bought, write that off, and reduce your taxable income. This is what we're doing. So now you have the asset that you needed. You needed it, right? You're not buying anything you don't need. But you didn't want to buy it before because, of course, you want to make sure that you're able to have enough cash. So now that you know you do, and you don't want to pay taxes on the money you make, so why not get the asset that you need, be able to depreciate that asset, and you can write off more expenses, pay less taxes. That's a whole key here. Hey, Karen, good afternoon. Thank you for jumping in, right? So we have more friends over here on IG. So, guys, did you get that? Purchase major assets. You can buy vehicles, major software, major equipment, you know what I mean? Do some leasehold improvement, things that you needed to do that you didn't do because you want to make sure that you hold on to the cash. You can do them now before the year's out, and then you can get that depreciation. If you guys notice that at the end of every year, you have these major inventory sale on new automobiles, on equipment, all this stuff is there. So these other businesses, they're trying to unload this stuff. And if you have the cash flow and your business needs it, you can go ahead and take advantage of that purchase, write off the depreciation, lower your taxable income and save more money. Okay, BJ Barrett says, does the whole vehicle cost of the vehicle get written off? Okay, so this is the deal. If you purchase the vehicle for the business, right, and you use it for more than 50% of business use, so the percentage of the business use of that vehicle is what you get to write off for your business, okay? And then on what they call a Section 179 depreciation expense, you can write off up to $25,000. So whatever business use that vehicle is, and if it's 100% business, yes, you get to write it all off. If you have more than one vehicle for your business and one is used 100% for the business, then of course you write it all off. If you have to split that use between personal, then the business portion, if that's 60%, 70%, however much percentage that is, at least more than 50% of the vehicle need to be used for business. So that's the portion that you do get to write off, BJ Morris. So of course, again, if it's the only vehicle that you use for the business, 100% of it you get to write off. So Shirai says, do I have to pay the vehicle all before I can write it off? No, because you are making payments on that vehicle, right? So what happened is the cost of that asset, the cost of the vehicle or equipment. Normally what happens is when you purchase this stuff, because you're making payments on it, you don't expense the whole thing. But because your assets, it's an asset to the business because the assets are depreciable. And what the rule allows you to write off a portion of that asset over a period of time. Say if it's a 5-year asset, so most vehicle is 3 to 5 years because after that they don't value much. And because you were able to write it off, the cost of it over a period of time, you didn't have to pay it all off when you purchase it. You can make payments on that. So what happens is with the bonus depreciation now that's in place, or the Section 179 depreciation that is in place, it allows you to write off more than just taking the normal depreciation. So you can write off 100% of that stuff and up to $25,000 on the bonus depreciation. I mean, on the Section 179 depreciation. So it's a big write-off deduction and it's a depreciable write-off. So it's not a cash write-off. It's no money out of pocket because you already spend the money. And this will reduce your taxable income, guys. You will pay a lot less taxes. So in answer to your question, Shiraz, no, you don't have to have paid it all off because you would have maybe making payments on it. But the cost of the asset, you get to depreciate it. Okay. And then for BJ Morris, of course, whatever, he said, nice, thank you. You're very welcome. Whatever portion of that vehicle. And guys, if you need, if you can afford to have a separate vehicle for your business, and that's perfect, you go ahead and get 100% deduction for that. Will you please teach us how to write off 100% of a vehicle? How to write off 100%? Well, first of all, we got to be 100% business use. So that's the first thing, 100% business use. So if you're in one of those businesses that you definitely need to use your vehicle a lot, just have two. Have one vehicle that's 100% business and one that is personal. And that way there's no question what's personal use. Because if there's one vehicle, guys, keep in mind, the way the rule is written, if there's only one vehicle, there's personal use. We all know that even if it's just going to the party. Now, you could be going to the party and doing business as well. But as far as the government is concerned, there's some personal use that happens with that vehicle. It's unavoidable that there's not any personal use in there, right? Going to maybe to just the grocery store to get yourself something. So you will have to decipher what's personal and what's business. But 100%, if you have a separate vehicle for your business, and most of us do, or most, businesses require you to have a separate vehicle, that's 100%. You can depreciate it, take the bonus depreciation, Section 179, write off 100% of that vehicle, and reduce your taxable income, guys. Excellent, excellent deduction. Save you a lot on taxes. And this is how those major corporations, this is how they make a lot of money and pay a lot less money. They invest in assets that the business needs. And then this is what they do. They invest all that money in the asset the business needs and they pay no taxes. And you want to know, how do they make millions of dollars that pay no taxes? They invest in assets, whether it's vehicle, whether it's property. You can buy property as well, any type of business asset. And then they write off all this depreciation, they do all this stuff, and they pay no taxes. This is what happens. All right. So Thanks, Jasmina, for jumping in. Hey, Rod. Hey, Margie. Hi, Elaine. Thanks for jumping in. Will you please teach us how to write off? Okay, so yeah, so that's what we got to do with that. She rides. Thanks, Lorna. Thanks for jumping in here. All right, guys. So that's the third point. Writing off the vehicle or your any other assets that you purchase for your business. Reduce taxable income. Save on taxes. That's what we want to do here, right? So the fourth point today, guys, is start planning for next year, right? So one of the things is that we're always, and I usually use this analogy, we're always behind the 8 ball. Look, we're all guilty. We're always behind the 8 ball. We're so busy taking care of everything and stuff like that. Strategically, we don't sit and say, you know what, let's start planning for next year. So when it's time for me to do my taxes, I'll have everything in order. And of course, I can plan ahead and save myself a whole lot of money. And you guys know how it is. It's like anything else. When you're late, you pay late fees. If you're on the late train, it costs you more money. If anything is urgent, you got to pay more money. It costs you a whole lot more if you don't plan ahead, and it just works just on regular stuff. She Rides Enterprise, just writing off 100% of my vehicle. What was that question? Writing up 100% of my vehicle, typically get the vehicle free. Well, call it tax-free. Not the vehicle free, but call it tax-free. To call it tax-free, right? Okay. So yeah, it reduces your taxable income. And let's say it was $25,000, you don't have to pay taxes on, again, by your taxable rate, whatever that percentage is, whether it's 15, 20, or 30%, that's what you save in taxes. Okay. So, I mean, yeah, this is a whole lot. This is all exciting. So we're going to have more sessions on this as well. Okay. So, again, back to start planning in advance, guys. We are always behind. And what happened is we pay more taxes because we don't plan ahead. So I wanted us to be prepared. Make sure that we stay on top of our accounting. I can't emphasize that enough. What happens is when you stay on top of your monthly accounting, and I know we all said this every year, I'm gonna be on time. I'm gonna do this on time. Every month I'm gonna see what this is. Every quarter I'm gonna check this out. When you are current with your accounting, guys, and you know what your business is doing, you can plan ahead to maybe make estimated taxes. You can also do certain things to make sure that you utilize tax credits, right? You want to also make sure that you utilize retirement plan for your company. You want to set those things up in advance so you can utilize those vehicles, which will save you on taxes. So you want to review the retirement plan, see what you could do there, make more contribution for your employees and yourself. So these are planning ahead, right? And then this will allow you to stay current. And if you got to make estimated taxes, you could do it early, because every single time you pay your taxes at the end of the year, when it's time for you to file, if you owe, you are already late. So you're already paying a late penalty, a late payment penalty. So, and this is what we all do. We all pay the taxes at the end. Oh, I'll file the taxes and then I'll pay them. But when that happens, if you owe $10,000, for instance, you are paying a late penalty on that $10,000. And if you were making estimated payment in advance, you would save yourself money. So, you know what? There's so many ways that we could save money on taxes. And I'm sure when we sit back and realize how much money we throw away, you know, you'll be mad at yourself. All right. So, hey, Cognac, thanks for jumping on there. Hey, Jasmine, thanks for jumping in. All right. So, Smart Dollar, I have a question over here. I say that I am going to keep track of my expenses every year. And by February, she said by February, she no longer is. Can you help me with that? Yes. I can definitely help you with that. I know we're all guilty of doing that. We were going to start it. We start this wonderful thing. We done made every spreadsheet or whatever software we're using, and we start off right. We just do. I mean, I used to have every type of book, and I mean any kind of 6-column, 8-column, whatever spreadsheet. You know, I did that, and then you're right. By February, you just lose track, and you just get busy, and work on making that money. So yes, I can definitely help you with that. So we can, we're gonna have to do better, guys, because we gotta save money so we can invest money and make more money to be more wealthy. That's it. If you notice, it's not that you don't make money, right? It's just that you don't always know where the money went. And the worst thing to find out later on is that you pay some taxes you didn't have to pay, right? Nobody wants that to happen. So that's why we're doing this, guys. So that's my fourth point today. Again, to stay ahead, plan ahead, plan for the retirement, plan, have your accountant pay taxes in advance if you have to pay any. And, you can review credits and make sure you take advantage of those, guys. So let me recap 4-year and business tax planning tips, right? And this is for everyone who is running a business, personal or a corporation. All right. So the point number 1 is know your numbers. That's where we start. We got to know what we make. We got to know what we spend. Keep track of all that stuff. And one thing, Samara, is, if you guys have a dedicated bank account or a dedicated, open a bank account and a card for your business, even if it's not an incorporated entity, if you have a DBA, you can go to the bank and open that. And that's a good way, again, to just kind of keep track, because what you're doing is you are just using that specific account or that specific card for all of your expenses. So that's one simple way of getting that started. So you can, at the end of the year or at the end of the quarter, now we don't want to wait till the end of the year, one monthly or quarterly, we can download those things and know exactly what we're spending. So that's the first point that you want to start off with, is tracking that stuff. Get a dedicated account for your business expenses, so you can know your numbers again. And then by you knowing what that is, you can make some plans before the year is out, because after the year closes, some things you won't be able to do again or take advantage of. Okay, so that's the first point. Second point is pay your accounts payable. If you have outstanding credit card bills, or you have outstanding bills that you need to pay someone, you have a profit now because you know your numbers. You have a profit. You don't want to pay taxes on that profit. If you have $10,000 in profit, you don't want to pay taxes on it. Why pay 20%, $2,000, when you can actually pay off a bill, pay a credit card, or prepay certain things? You can also prepay. There's another point. You can prepay certain things like rent, insurance, and some other business-related expenses. Anything within the 12-month period, you could prepay that as well. You got to pay it anyway, so you can prepay it, write it off if you're on a cash basis, and not pay the taxes on that profit. Okay, so that's what we want to do. This is some really good stuff. I'm excited. All right, so that's the second point. Pay your accounts payable, credit card, or any prepaid expenses. And the third point today, purchase major assets. If your company needs equipment, any type of major software, computer stuff, vehicle, which most people usually can use, upgrade their vehicle, is something that maybe, more appropriate for the business that they're in. Maybe the car doesn't work. They need a van or they need a truck, certain things like that. It's time to do that, because you need that now to suffice your business operation. So you want to do that so you can write off the depreciation and save a lot of tax dollars. So that's the third point. And then fourth is start your planning for the next year in advance. Start it early, start it now. Once you figure out what your year-end looks like, you can plan in advance. Know that you're going to stay on top of it. Like Dry said over here, Samara, is that you plan your business expenses, just lay it out, and hopefully we have a plan. We have something strategically in place that will allow us to stay on top of it, so that by the end of the first or second month, we're not like off and running and doing other things, right? So that's what we want to get on top of, guys. So those are my 4 points today. The whole idea of this conversation is to allow you to make money and save money on taxes. We don't want to throw it. Like our motto is, don't throw away your hard-earned dollar. And you want to know why people that make millions of dollars and all these major corporations, all these folks that make all this money, why do they pay less taxes than the everyday person or the secretary? How come they're paying a whole lot less taxes? Well, they make that money. They strategically plan to figure out how they can get around paying all those taxes. And that's what we want to learn, right? We need to know the trick that they use it. All right, so that's why you guys are here today. So hit like and share on this, guys, and put your comments in the chat below. I will come back through here and check those comments out and respond to them. If you guys have any further questions on this stuff, you can give us a call at PROBY'S Tax and Accounting. And that number is 323-290-9034, and or visit our website at PROBY'Stax.com. If anyone needs to still get their taxes done, because we don't want to go into 2022 and haven't taken care of them, right? Because we are going to get ahead of this, right? That's what we said. So if you need to do that, of course, we have a secure portal. You can upload your documents if, in fact, you need us to take care of it. If you have someone else to do that, stay on top of it and get it done. All right. So Pam said, great info. Thank you. Thank you. Thanks, Elaine. Thank you for jumping in, guys. I really do appreciate it. This is, like I said, free information, great information. Hopefully it's simple enough. And again, once you know, if you don't know it, you can't do it. And once you know what to do, of course, we off and running. We got this, right? We got this. Okay. So with that said, thank you, Connie. I said, thank you so much. Thank you for tuning in as well. So on Thursday, we're going to talk about some more tax saving tips for personal people who are on W-2s, who's getting a payroll check. We're going to talk about things that you can do also to save on your personal taxes. Thanks, Elaine, from Margie. Great information. Thank you. Great advice. Appreciate that, guys. So we are going to be talking about the personal tax side of saving and doing things to make sure that you don't pay taxes from your personal tax perspective, even if you don't own a business. So that's what we'll talk about Thursday. Tune back in here at 1 p.m. Hi, Renee Gordon. I learned a lot by listening to you talk. Oh my God, I love it. Thank you so much. I really love doing this. Appreciate it. Thank you, guys. All right, awesome. Okay, so we'll be back Thursday, guys. On a personal note, get all your friends involved. And for people who don't have a business, and even in your personal tip, even if you do have a business and those without a business, we'll talk about how you can personally save on your taxes and do things that you don't have to pay as much taxes. This is planning ahead, right? For the year end. All right, guys. So with that said, I will see you guys on Thursday. I want you guys to have a wonderful rest of your Tuesday afternoon. And with that said, you guys take care of each other and take care of yourself. Bye-bye.